Gotcha. And correct me if I'm wrong, but I'm assuming Lemonade is one of those names, right? I think you guys talked about that quite a bit.
It's, that's a really interesting one, because there's, like, we acknowledge there's a decent probability that they won't succeed. I think Emmet and I both think in like probabilistic terms. Sure. So, it's a risky position for sure. And obviously it's been hammered this past year, as all growth names have been. But Lemonade is one where, like, the addressable market is just gigantic. And I think the way that they're going about building their kind of technology platform, the use of AI, and the incredibly high customer satisfaction scores that they have are, lead me to believe that there's a high, a decent, I should say, probability that they can, 10x, 20x from here. So yeah. I like that outcome, and especially with where their price is right now. I mean, they're trading at less than 2 times their cash balance. So it seems like there's a decent kind of backstop to valuation there. Obviously, they could kind of whittle away cash over the next couple of years, and right. Be bought for pennies on the dollar by some competitor if they don't execute. But if they do, it's like, okay, I like maybe there's a 25% chance that they 10x or 20x, and so if you do an expected value of kind of those outcomes out of like a probability distribution, say, okay, I'll take that bet all day long. Yeah,
for sure. And like Lemonade, for me, Lemonade was a name. I'm going to preface this: I am not a financial expert at all. I just like to buy stocks here and there. So I just want to, for the audience, do not listen to anything I say. And Matt as well, although he's an expert, do your own research, damn it.
Well, this is not financial advice. Like, Emmet and I talk about this stuff openly, but obviously we're not financial advisors, and this is not advice.
100%. But in the case of Lemonade, so the thing that really caught my eye with Lemonade was that I think Dave Lee had started making some videos on it, and then he had the CEO of the company on his channel and did an interview. Mm-hmm. And that was the one thing that I always look for, and this is like sort of like a gut check. It's more like an art than a science, but I feel like oftentimes I'd like to think that I'm a decent judge of character when it comes to folks. And obviously I'm not talking to this person in person, but Dave is a surrogate for me, because I trust Dave's sort of way of thinking and the way he asks questions. And that interaction between him and the CEO was it really impressed me, because it really did come across as a person who's really trying to do the right thing by building a company that's going to help people, and it's also trying to disrupt the area that it's trying to get into, which is insurance. And then just recently, I started rereading The Innovator's Dilemma, which I don't know if it's a book that you've read before, but it basically talks. I read it like back in 2013, 2014, and it was in this specifically within the topic of Tesla, because it was sort of connected to that. But I feel like Lemonade, and I'm going to kind of walk you through my thesis, and you tell me if I'm thinking about this incorrectly, or we'll just kind of shoot the shit here and try to figure out if I'm going down the right path. But in the case of Lemonade, so they already have a very small market cap compared to their competitors. I think they're like a $2 or $3 billion market cap.
Yeah, and they're under 2 right now, I think, actually.
And then they're big competitors, like these big insurance companies. They're at or over 100 billion, I believe. I don't know if that's the case.
I think there's some in like the 50 billion range. Okay. But like tens of billions to hundreds of billions is like a normal market cap for these insurers. Yeah.
Right. So if I'm thinking about Lemonade's long-term growth, I'm thinking, okay, if Lemonade becomes a legitimate player of insurance, that sort of market cap valuation could be how Lemonade is valued if they are able to reach a similar scale than these competitors. And then within the context of the Innovator's Dilemma, one of the things that the book talks about is that it's not necessarily that the technology that's coming in to disrupt has to be some sort of massive improvement on the existing, is that you're completely recalibrating what your customer base is based on a brand new value proposition, right? So that's sort of the overarching theme from the book. And if anybody in the comments disagrees with me, I would love to hear your opinion. Or if you disagree with me, Matt, I would love to hear your opinion as well. But that's sort of my takeaway. So when I think about Lemonade, I think that the key thing that people want to do when they have insurance is just to not deal with people. Like when I think about somebody that is, if I have an insurance claim, I just want to get on my phone. I want to get it over with because something crappy happened. I just want to file my claim and I just want the money to come, right? I don't want to deal with these like hoops and talking to 3 people and get it approved and stuff like that. So I think that's where Lemonade that part of the AI piece is so freaking important. It's just removing the people aspect from it and having it just be the streamlined, super easy thing. And I think that's why it's getting such high scores, is because people are just not dealing with people when something shitty happened, which is when you file a claim. Am I thinking about this incorrectly? Because that's my overarching theme as to why I think Lemonade's going to be very, very successful, is that they're removing an aspect of the business that I think folks are undervaluing, which is dealing with somebody when something crappy has happened and you got to go through hoops to get the money that you need to kind of move forward. What do you think?
Yeah.
Am I too simplistic?
Yeah, that's one of I would say a couple different really important kind of theses. But just to drill down on that one a little bit more, I completely agree with you. Like, I think you're not going to get a lot of like 60-year-olds signing up for Lemonade, right? Because they'd rather have like an insurance agent that they talk to.
Right.
So like, clearly this is not going to be for everyone. But if you're looking at like who's kind of the up and coming demographic, it's going to be people in their 20s and maybe early 30s who are kind of just starting out their career. And that demographic absolutely doesn't want to deal with people. They want to do it on their phone. They want it to be handled quickly, and they don't want like a 45-minute long, interaction with some agent to process a claim. And so if you look at where Lemonade is successful right now, it's exactly with that demographic. It's with, the younger people right now. Their renters insurance is kind of like their biggest product right now. So it's like, they do get a little bit of a ding in markets because, their in-force premium per customer is like, I think it's $240, $250, something like that. So it's relatively small, but I look at that and say, okay, so they've got an incredibly loyal customer base with net promoter score. I think it's like 78 or something like that. I forget what it is, 79, I think it is. So like just a notch under world-class. So incredibly good high net promoter score. And it's with the demographic of people who are kind of just starting out their career and will be, leaving an apartment to purchase their first home, and will be, buying more expensive cars, and their wallet is going to be growing because it's like when you just take your first entry level job, of course you don't have a lot of money, and you're not going to be spending what is it, like $8,000 a year on insurance because right.
Right.
You don't have that much money. But as that demographic ages and they're incredibly loyal to Lemonade, I think that's like the best possible outcome. Because so I think one of the things that I think through is like, of course they hit the sweet spot within that demographic, which I think is important. One of the other side benefits of that kind of lack of customer interaction or customer interaction is you are able to scale a lot more efficiently. So if they do, say, 10x their customer base from here, their OpEx won't need to increase anywhere close to 10x because it's going to be handled with this, kind of software backbone that other companies don't have. So if you're trying to scale like AIG, like double, let's say you want to double AIG's revenue. Well, you're going to have to probably double the amount of agents that you hire to kind of handle claims and everything like that. So I think existing insurers are going to scale linearly. But if Lemonade is successful in scaling, their operating leverage should be quite remarkable. So you think the customer base increasing, like actual customer count is going to just increase naturally. Then the in-force premium per customer, if I'm thinking about this right, should also increase over time, just as that demographic kind of ages up and gets a more kind of mature product set that they're buying. And then if you kind of run those financials through a really efficient OpEx scale, it's like, man, that's going to be, they may have a higher multiple. They probably will have a higher multiple applied to them than those kind of existing insurers, because they should be more profitable if this thesis pans out. So that's where I get really excited is on the kind of extreme bull case where they continue growing their customer base, they continue to increase the in-force premium per customer, and their AI allows them to kind of price things appropriately, get the loss ratio down kind of closer to industry average. If they get that kind of core business right, then the operating leverage is going to be phenomenal.
Yeah, and that operating leverage is sort of the parallel that I draw to Tesla specifically, because that was the thing that really attracted me to that stock in the first place, which was that operating leverage. You just dump the money in, and then stuff will just come. You don't have to spend that much to get that incremental sale. It's just you laid everything out. And I think it really just comes down to folks believing that their AI expertise will really allow them to get there. I think it's just maybe that's the bottleneck. And I guess they're also very small, compared to their other competitors as well. And they're only doing renters? They're doing pet insurance. Are they doing anything else?
I think they have auto in one state in Indiana, I believe. But with the Metro Mile acquisition, they'll get registrations in 50 states. But that won't really kind of flow through until next year, probably sometime. In a meaningful way in the financials. And I think they're starting to do some term life as well. But for the most part, like pet and renters is I think the kind of bread and butter right now.
Got it. Okay.
And so there's absolutely execution risk there. Like it's not a slam dunk that, they'll increase in-force premium per customer and continue to grow the customer base. One of the things that Dave Lee has highlighted and some others as well is like their marketing spend seems really high compared to the lifetime value of the customers, which, if my thesis is true, that won't matter because the lifetime value of the customers will increase over time as those customers kind of mature. But if I'm wrong, then that's actually a really significant issue. If you can't grow the in-force premium per customer and you can't spend your marketing dollars more efficiently, well, that's kind of it for Lemonade. Honestly, it's like, well, they need to either like drastically shrink their marketing spend or find a different way to do it or something like that, because like you can't have for a prolonged period of time your marketing spend per customer acquired be higher than the lifetime value of that customer. That obviously just won't pan out.
Got it. Do you view that as the largest sort of headwind for the company moving forward? How do you view the risks?
It's one, like, I think that's one. I have a high degree of confidence that they will overcome that, but when that happens is less clear to me. So, I think what you've seen is like, you start digging into these financials a little bit. It kind of makes sense to me why the stock got hammered. But in my mind, I'm like, well, it doesn't really matter that much in the long run. What matters a lot more than, customer acquisition cost, which is not, crazy as a dollar value itself, but is getting how successful are they at kind of increasing that in-force premium per customer? And that has been increasing over time. And so if that continues to increase, then like that concern will go away. And so to me, it's kind of like a lot of the Tesla haters would say like, oh, well, like Tesla loses money on every single car they sell. Yeah. It's like, well, okay, yeah, that's true until they don't. Right. And then it was like, okay, well, Tesla's only profitable because of credits. It's like, okay, well, I see your point, but operating leverage, like that doesn't, at this particular point in time, that's true, but that doesn't mean that will always be true. So you need to look, 2, 3, 5 years down the road and get, okay, where do the trends suggest that this company is going? And so with Tesla, to me, it seemed really clear that focusing on, net loss per car in 2019 or 2018 was a really stupid way to look at Tesla. But that's the way a lot of people looked at Tesla. Mm-hmm. And with Lemonade, I think the same sort of analogy is applying here. We're looking, it's like, customer acquisition cost is higher than lifetime value. Bad company, stock should go down like 80%. They'll never make it. I'm like, well, no, that's like an overly simplistic way. You need to take like a holistic approach and kind of do your best to project forward where the company will be in 2, 3, 5 years and say, okay, do I really believe that, in-force premium per customer will increase? Yes, here's why, but challenge that assumption. And same thing with, marketing costs. And will they actually be able to scale OpEx? Will they actually be successful in kind of decreasing their loss ratio over time, which they have been? But you got to go through each one of those individuals and not or individual assumptions. And I try to be very realistic. Like with Tesla, when I was going through this exercise, like I tried to be conservative on a lot of the assumptions, and even still, I was like, okay, I think the stock is going to like quadruple from here in 2019 was kind of my thesis, even with what I thought was kind of conservative assumptions. Yeah. But it was because I was looking at it in a way that was much different than the way kind of normal Wall Street analysts were projecting it. Yeah. Where there was like a reversion to the mean, or like Toyota was the best possible outcome in terms of like financial performance for an automotive company that could be possible. It's like, well, no, that's an artificial limit. That's reasoning by analogy rather than first principles. So I try to kind of think through things in that level of like granularity. Got it.
And so if based on so where we are today with Lemonade and sort of everything that's going on with that company, and let's zoom out 10 years in the future. What, because you talked about thinking about these things in a probabilistic can't even say the word because I have an accent and it sometimes doesn't come out.
It's a hard one for me.
It is weird.
I struggle with English, and it's the only primary language.
What percentage success chance would you give Lemonade to reach your expected positive outcome? Is it 40%, 80%? Just curious to hear. And if you don't want to share the number, that's fine too. But I'm curious.
Emmett and I actually we talked about this in a recent interview we had, and normally Emmett's more optimistic on this stuff than I am. But I think I actually said I think there's like a 75 to 80% chance. Maybe not that they increase 20x, but that they're kind of successful generally with these trends that I've outlined of like increasing in-force premium, customer base continues to increase. You get the financials in some sort of like stable cash flow positive position. Over 10 years, I think it should be a lot higher than that. But maybe in 5 years, they get to that point where it's like, okay, clearly they turned the corner. They're not like a bankruptcy risk. Emmet, I think, I forget his exact number, but I think he said somewhere like 60-65% chance that they get there. So I'm actually a little bit more optimistic on than Emmet on that point. But like it's like when you're investing in growth companies, there absolutely is a probability that they don't figure it out. Like
most fail, Tesla, right? Don't like 80% of them go back. Yeah,
for sure. Like Tesla. What if Tesla never figured out the Model 3 ramp? Like, of course, they could have raised more capital and everything like that. And, maybe they eventually have to like bring in some actual automotive expert who can tell them how to run a plant and like that sort of thing. Like that was a probable or a possible outcome, at one point in the company's history. And of course, before then they could have failed too. So I think it's important to kind of be reasonable about that and not just say like, oh, like YOLO, I'm going to, buy like deep out of the money option, like calls, and I'm going to 100x if I'm right. It's like, well, maybe, but maybe there's only 10% chance that you're right. And so what's the outcome there? And are you comfortable losing everything if you kind of, put X amount of dollars into that investment? So I do think it's really important to kind of be prudent in that regard. Gotcha.
Yeah. So it's pretty, those are pretty, those are very favorable success outcomes. There's one thing you said about the Model 3 ramp. So like, I think what's interesting about like the parallels that I draw between those two is that Tesla's Model 3 ramp, I honestly think that and I'm trying to figure out how to bring this back to Lemonade, because I view them in a similar place where they're in a position, unless they turn the corner, they're probably not going to end up well. And everybody that is positive on the company is saying they will turn the corner. They will turn the corner. What's interesting about the Model 3 ramp was that and you can see this with the Sandy Monroe videos. You can see this about Elon's comments about how they use 17 different materials in the rear casting, which was one of the dumbest decisions they could have made. A lot of decisions that Tesla makes when they ramp up brand new things, they seem like they're way less than optimal, but they're optimized to just get it out the door. Just freaking make it happen so we can start getting this product out to the market. But what's interesting about the Tesla way, which I've seen personally, is that the only company that can do that is Tesla, because of the talent they have and the engineering that they have and the leadership that they have. If any other company approached the Tesla sort of ramp, like GM or Ford or anybody else approached the Model 3 ramp like Tesla did, they would go bankrupt so fast. But the reason I think why Tesla succeeded was because they had those people there that were able to innovate constantly on that. Just get it out the door, and then we'll figure out how to make it better over time, which will improve our profitability. And then with the scale that we'll have, we'll be fine. Do you think that Lemonade has a similar level of talent and similar level of leadership that will allow them to sort of turn that corner? I'm curious to hear your thoughts about that.
Yeah, that's a really interesting question. It's so true on what you said on the Model 3 ramp, because like I remember my CEO at the time at the company that I was working for used to be an executive at GM, and she went and toured the Tesla plant. It was like in 2017, I think it was, maybe it was 2018, and she was telling us about like what a total disaster it was, and they would never figure this out. And like she was saying all this stuff of like they don't understand like basic automotive manufacturing. And I was listening to her, I was like, okay, you're more of an expert in automotive manufacturing than I am. But I also think you don't know what the hell you're talking about, because you've got this one, way of thinking about things. And then like Tesla turns around and like says, well, we're just going to put a tent up there and we'll solve the problem. Like that was not in the playbook of like GM or Ford or anyone. Right. So it's really interesting in terms of how that translates to Lemonade. I think realistically that they don't have the kind of brand cachet that Tesla has right now in terms of like attracting like the if you're a top AI engineer, you're probably going to choose Google or Tesla over Lemonade right now. Let's just be honest about that. But that doesn't mean that they're not doing things in an incredibly innovative way and that they don't have a very talented team. I mean, I think the CEO is incredibly capable, and they've got kind of like a dual role where I think the kind of skill sets of the two really complement each other well. So, you know, I would say they're not at the same level of like a Tesla or a SpaceX, say, in terms of kind of brand cachet and attracting top talent. But they're going against an incumbent space, which is, you know, so backward looking and is frankly kind of slow to move that I think they've got. It's possible they may be going up against like weaker competitors than Tesla was within the automotive space. You know,
wow,
is it better to take on, you know, AIG and, you know, MetLife and all these companies with like their 200 years of actuarial data that, you know, things have always been going this way, and we know how to run this business and it's safe and like it's very predictable, honestly. But so I don't think they're going to be successful in kind of like making a move to not having agents and automating things in a meaningful way. And part of the reason the Net Promoter Score is so high for Lemonade is because they're very focused not only on like getting the AI right, but on like the human interaction with the AI. So they spend an insane amount of time on details like how should we word, you know, this like third screen in the claims process. And so they try different iterations of that. And they're very kind of mindful of what is the consumer thinking at this point of time, and how can we make the process better? How can we get better information out of the way that we design this screen? So I think if, you know, AIG or one of these other, you know, insurers tries to launch something similar, they won't obsess over the details like that. You know, like they'll probably outsource it to a third party that like, you know, can handle the AI a little bit. Maybe they'll build an internal team, but it'll be like designed by committee sort of thing. A lot like the Chevy Volt was when GM wanted to compete with Tesla, and it was like, okay, they, you know, over-engineered it. It was, you know, a money-losing product, and still nobody really, you know, flocked to that as a you know, BEV. So that's a bit of a whining answer, but I think there's maybe a lot to unpack there with the kind of competitive landscape and what they're doing, what Lemonade is doing, kind of differentiated from the traditional incumbents.
Yeah, it makes total sense. Do you know how old? I should have looked this up before because I really wanted to pick your brain on Lemonade. I don't know why I didn't look this up. Do you know how old the average incumbent is? Like of the insurance companies? Are they like 100-year-old companies? Do you know by any chance?
I don't know about the average age, but like, what's that? Like, there's one out of England that's like literally was created when like people were shipping things in like the 1700s, and they're like, oh, okay, well, if the whole ship goes under, oh gosh, what's the name of that one? I think it's Lloyd's.
Okay,
just
Lloyd's.
Yeah, so Lloyd's is
curious.
Lloyd's is 336 years old. It was founded in 1686, and they're one of the largest insurers in the world. Like highly reputable. Like Swiss Re is 158 years old. I'm just looking at this right now.
AIG is 1919.
Yeah,
102 years old.
Relatively new. But like people know how to run these businesses because they've been doing it for literally 100 or more years, or 336 years if you're Lloyd's. And so I think like the willingness to take a risk on you know, something like what Lemonade is trying to do is probably going to be pretty small. And I think if they do dip their toes in that direction, like it's going to make sense for other insurers to do kind of telematics like Metromile is doing. And some of them are already doing that to some extent. So I think they're going to be forced to, because literally to price that product well, you need better data. So I think they're going to just the auto business at least will lose if they don't, you know, adapt to that. But I don't see the others kind of building this AI, you know, it's like an entire one piece of software essentially that like handles everything for the company, like claims processing, pricing, you know, underwriting and you know, actuarial kind of analysis, and it's constantly evolving and getting better over time. And I just don't see the incumbents doing that in kind of like a holistic way that would allow for like a step change in profitability with like the operating leverage that we spoke about.
Yeah,
I think there might be some incrementalism there, but not like the big step change.
I agree. I think the way I think about really old companies, especially in this day and age of technology, is that time is totally against you. Like the longer you've been around in this day and age, the worse you're gonna have. The growth is gonna bring more people in that over time are gonna become entrenched because of human nature, right? They're just gonna be like, I don't want to change. This is too hard. Hire somebody else. I want to keep my job or whatever. Like there is a lot of like 102 years old in 2020, a company that's been around for 102 years old. All I think about is you are about to just fail. Like something bad's going to happen to you unless you literally figure out how to completely dismantle the company, turn it into a bunch of smaller companies, and then start brand new with brand new staff. Is that weird to think? Because literally, like the older the company is, the more I'm like, you're dead. Like you're going to get disrupted. It's only a matter of time with technology. What do you think about that statement? Is that too like narrow-minded?
There's probably some exceptions where that's not the case, but sure. It seems increasingly true. I mean, the pace of technological improvement is accelerating, and that's going to, in my mind, drastically change the entire economy. And so, of course, if you're drastically reshaping the economy, then there will be companies within there that are like extreme winners and a lot that are, huge losers. I was actually an intern for General Motors for 2 summers before I moved out to New York.
Whoa.
And like I knew nothing. Like I was like literally in college, like interns really don't do anything, but I was like seeing the culture and like the types of people that they had there and like the layers of management. And it was like, okay, I remember going to this one meeting with somebody who was like an executive director, and all the like people who were with me, like, oh my gosh, it's such a big deal. Like we're talking to the executive director. And I'm like, it's just a person. Like, why don't we like there was so much focus on like the company procedures instead of like the end value that we're delivering to customers or like profitability. And so, yeah, I having just seen that firsthand, like as like a college intern, I could see that there was something like definitely wrong with General Motors. And then like a year later, they went bankrupt, of course.
Wow.
But I know a lot of people in that space right now, GM, Ford, a lot of my good friends work for those companies because I'm here in Michigan, and like all the same concerns that I had, when I was an intern so many years ago, like they're still there. They're like, oh gosh, like so much bureaucracy. And so I do think, certainly within the automotive space that bureaucracy is there. Wow. I actually have a good friend who's also kind of in the insurance space. He worked on an insurance startup. And so I've kind of picked his brain on the industry. He's actually pessimistic about Lemonade's future. So it's good to really bounce ideas off of him. But I think he's got a little bit of that legacy mindset in my mind, and I love him to death. It's nothing personal about it, but it's like, okay, I want to get the bear case from you. And then I kind of process it. And I still think you're kind of missing the mark. So I do think within the leadership of a lot of these older companies, to get to the very top, you have to have like succeeded in the old realm.
Right.
So like the kind of person who would like say we need to drastically overhaul this company is not going to be successful at climbing to the top of the ladder to be in a position to do so.
So true. So true. Yeah, I'm not surprised to hear that the folks that you're friends with at those. So they're still there today to this date. They're still working at like GM and those companies, or was that?
Yeah.
Recently?
Yeah.
Okay.
Yeah.
So they're still there.
2 of my closest friends. Yeah. One works for Ford. One works for GM. The third friend actually works for an insurance company. But I've got a lot of other kind of friends and family that work for, suppliers in the automotive market or for GM and Ford also. And it's pretty clear, like, to hear them talk about it, that they don't love working there, but it's a good paycheck and it's like nice benefits and everything. And
yeah. Wow. So
tough.
that is, I mean, that's doom. I mean, that's like, how does Ford or GM, like outside of literally completely changing their 100-year-old culture, or however long they've been around, and sort of these layers of bureaucracy, how do they pivot to compete in the coming decade? Like Rivian and Tesla and all these newcomers, they're so ripe to just be completely demolished. My concern is, the impact to the economy. Like in my head, GM and Ford are already bankrupt in my head. Like, and they've been bankrupt for the last like 5 years. I'm like, this is just somebody, I forget who said this, but they explain it as this is the slowest motion train wreck you'll ever see, is the failure of GM and Ford as they go through this sort of disruptive change. And my biggest concern in the coming years is, as they start to fail, the amount of jobs that are going to be sort of lost and the way the economy is going to be impacted because of their failures could be significant. Do you ever think about that? About, you know, how these legacy automakers, when they start to fail, if they start, I don't know if you believe that they're going to start to fail, but I'm curious to hear your thought process about legacy auto. What do you think the outcome is going to be for these folks? And if the negative outcome is true, do you think it's going to be as big of an impact to the economy as I think it is? Or I'm curious to hear your thoughts there.
Well, I mean, we lived through it in recent history. I mean, Chrysler and GM went bankrupt in 2008. Yeah. And what happened there wasn't a huge surprise. The government bailed them out. And, you know, people in Michigan, like all my friends at that time, everybody that works in the space was like, well, they have to get bailed out, because if they don't, and even like Toyota supported the bailouts, which seems strange. But literally, if GM and Ford just don't pay their suppliers, the suppliers will go bankrupt, and then the entire supply chain will like collapse. And so then the other OEMs won't be able to produce cars. It's like it could produce this kind of like, you know, runaway, you know, economic effect, which is, I think, a legitimate concern. But I think the most probable outcome, and you see this with like how successful GM is with their lobbying right now, like pretty sure if that happened again, they'd probably just get another bailout. Yeah. You know, the way the political landscape is working right now, like I don't see any sort of like principled stand being like taken where it's, you know, people say, well, we just have to, you know, kind of let go of these legacy players that aren't competitive anymore. You know, GM had its balance sheet like radically cleaned up. They were kind of speeded in and out of bankruptcy. It was like 60 days or something ridiculous like that. Yeah. It was this like pre-planned bankruptcy where there was somebody from the Fed that I think got a board seat, or maybe it was even the temporary CEO at the time. I kind of forget the details, but yeah, you know, there was so much kind of like interaction between the federal government and GM that it was like, well, like all the agents who kind of led into this situation, they were fine. You know, they got, you know, nice you know, packages and buyouts. Yeah. And of course there was some pain for the bondholders, but, and the equity holders got wiped out. But, yeah, I can tell you, like from living in Michigan before 2008, when they went bankrupt and after, the economics didn't really change too much. So it's kind of some sad commentary. And I think they're trying to move in the right direction. But I was listening to the Ford earnings call this week, and Jim Farley was even saying, you know, in order to have a successful EV business, we need a successful ICE business. So what he's saying is like, they're not successful. Like they can't profitably sell EVs right now. And so I hope they can manage that transition, but I don't think they can.
Yikes. That's scary.